So we have seen here many lending companies, and it's a little bit, but actually payment, it's different. There you have like companies growing up very quickly from left, right, and center, like checkout. But lending, it seems to me, is one of these hard-working industries where every year you do a little bit more.
Yep.
Tell us about your business model. How are you different, if at all, to the others?
Yes, so CrossLend basically is a digital debt marketplace that works within the economy and connects different lending platforms, such as the marketplace lenders that you would see here, but also banks. Basically, we take the origination, and wherever there's a need to move assets to someone else, we provide a digital settlement structure. And on the investment side of our platform, you would then find other insurance companies, other banks, potential other institutional investors.
Is it a B2B or B2C business?
It's a pure B2B model where we basically connect to people or originators in this case who have a need to offload loans that can be driven by balance sheet constraints, originate to distribute, that can have internal reasons where you want to have within a bank assets moving in between different balance sheets of the organization. So it's a very broad spectrum of applications.
And your customers are mostly corporates, I believe.
Our customers are only
financial institutions.
Financial institutions. So we work with banks on the one side, marketplace lenders on the one side. As originators, we take origination from them and we put that into products and sell that to institutional investors.
So you're like an investment banking SaaS product.
Exactly.
Or capital markets SaaS product.
Exactly. So that's how the whole thing works. So basically, we are digitizing a part of the business chain that today is mainly predominantly dominated by banks, investment banks. And as you know, they are have their cost basis, and they're not essentially known for digitization per se. So
it's a bit like ShareGain. I don't know if you know them. They do the share lending.
Okay.
And they also engage banks among each other through a neutral platform like yours.
Oh, correct. Yes, that's basically it's like an exchange. I mean, it's like a capital market structure that is not existing today. The whole thing is mainly also driven by the idea of the Capital Markets Union by the European Commission, where basically the action plans of the European Commission say we need one unified European market where the different banks can interact on the debt side. Because if you look into the market, then you will find in Europe a lot of highly specialized, highly regional banks, and they always end up with the same problem. So they always will run into a concentration risk. And then from a regulatory point of view, they have to stop lending.
Concentration risk by borrower or by geography?
Well, in that case, that's basically sometimes the same. Like if you are active in a particular region, in a particular country or subspace of a country.
So you diversify the risk of the financial institution. And in what countries are you operating? Sounds like a European business.
It is supercharged by European tailwind from the political side. We are mainly active in Europe, but we already see a lot of demand coming from the US as well. And there's no go-to solution if you want to do transatlantic debt trades. And
is that something which is in demand? I mean, I understand that the European Union want to balance the risk a little bit, and there are synergies between the countries. But do you expect to move debt around the world? Is it value add?
There's a couple of points to that. So number one, yes, there's no transatlantic go-to solution. That's an important aspect. So same thing that we do within Europe. There's demand also elsewhere. And then the debt settlement technology between institutions, basically the ability to do what an investment bank can do at a very large size, you can do that at a very small size if you digitize the process. And that enables a lot of new use cases. So for example, you can easily originate to distribute within a bank group. You can basically rebalance your balance sheets if you're a group of consisting of multiple banks. So there's a very broad spectrum why debt settlement technology is required.
Can you share some numbers with us? I think you raised 50 million euros.
35, but yes.
Oh.
Yeah, altogether that's probably even more than 50, but we just raised a 35 million round
some great investors like Lakestar, Early Bird. These are Solaris Bank is an interesting one. Do they give you more than money? Are they helping you also operationally?
So Solaris Bank basically works on both sides of the equation, offloading and investing.
They're a distribution partner for you because they have many bank customers?
That is one of the angles in the partnership with Solaris Bank. The round was led by Santander, so we also have ABN AMRO as an investor in the company, and they're all using the technology in the meantime.
And is that an issue for the other banks that you have competitors as shareholders?
No, not at all.
Interesting. It's probably good, no?
Exactly.
Oh, look, there's a name in the cap table. They have already checked it.
Exactly, that's the point. So the more of that sort you get into your cap table, the better. I mean, we have also the CME Group as an investor with the European Investment Fund, so that has gone through various checks. And that's important also for our customers on the platform because they understand that from an equity perspective, there has been a very, very in-depth due diligence process.
If you look at the top 50 European banks, you have half of them by now, or?
Not yet, but so there's not everything we do is public.
Right. And the banks who are on your platform, they have obviously an advantage. Can you qualify or quantify like how attractive it is to be on the platform or how unattractive it is to not be on it?
Well, basically, if you're not using that technology, then you're left with either direct partnerships with all your counterparties. That's awful.
Becoming very manual.
From an operational perspective, it's awful. Or you use traditional structured ABS, and that's penalized from a regulatory point of view, capital charges. And also, basically, that only works if you have to move large packets. Most of the applications that we have on the platform are like tickets between like 10 and 100 million. So that's something where you wouldn't find a suitable solution with an investment bank.
Are there any competitors you have? I mean, it sounds quite unique. Has anyone heard of a business like that before? See, we always bring you new companies you have never heard of.
And they didn't take a loan, so that's probably because they want to learn about it. Now, like we are basically digitizing a process that at the moment is done by investment banks. So naturally, they are a competitor, and we have seen a lot of interaction with them on a customer level already. Funnily enough, in most cases, we have received applications for positions at CrossLend after we met in the market. So we learned a lot. But there's also partnership models with investment banks because we take over stuff that they cannot do, and then we do the other end of the spectrum.
It's quite interesting. There was a presentation here, I think last one or the one before, who showed the IT investments of banks. I don't know if somebody saw that, but I think it was like 200 billion or something like this. So either our IT outsourcers are working incredibly inefficient, or the banks are overspending, or both. But if you compare the 200 billion to the capital raised by Fintech, it looks like that the banks have to pay a bit of stupid money. How do you see the future of the banks and the Fintech companies, especially in Germany, like Deutsche Bank, who's coming regular to NOAH? They also shown that it's not invented here is not anymore a problem. They do partner a lot with Fintech businesses. Are you calling more the banks, or are they starting to call you more than you them?
Now they started calling us, but in fact, you asked about the future, and I think that this collaboration model is really something that's super important. Because a couple of years ago, everybody thought fintechs would disrupt banking, which turns out to not be such a great idea. So I'd rather leverage their efficiency by 10% than actually competing with them all.
Well, you say it's not a good idea. I think it's a very good idea because lots of money wires of mine got lost because of some weird Swift codes. But I don't understand our financial world anyway. Now we have crypto and nobody's using it. It's crazy, no? And do you see at any point in time a fintech business buying a traditional bank?
Yes.
Yes. Well, we wait for that moment, hopefully next at NOAH. Amazing business you built, really respect.
Thank you.
Because I have been working 12 years for an investment bank, and I tell you, it's not easy to sell something to investment banks.
I know.
Well done.
Thank you so much.
Congratulations.